Let's dive right into this explainer. Right now, cybersecurity giant CrowdStrike is staring down an incredibly high-stakes test, sitting at the intersection of some of the absolute biggest tech trends in the market today. We're talking cloud computing, artificial intelligence, and increasingly AI-powered cyber attacks. They are in a prime market position. Naturally, because of this, the market is watching their every move. But as we know, with massive market positioning comes massive expectations.
So, the real question we need to examine today isn't whether the company will grow. They're already an established powerhouse. It's whether they can continue to grow fast enough to satisfy Wall Street's sky-high expectations. The bigger those expectations get, the harder it is to actually surprise the market, right? They don't just need to beat estimates, they literally need to prove their growth trajectory is accelerating in a rapidly evolving digital landscape.
All of this tension is going to completely culminate on August 26, 2026, when they release their fiscal second quarter 2027 results right after the market closes. This date is circled in red on every tech investor's calendar. It's not just another quarterly update, it is a major structural test of whether their AI security opportunity is truly becoming a massive growth engine.
Let's quickly establish our baseline, looking at their Q1 financial performance.
Just to put things into perspective, in Q1 of fiscal year 2027, CrowdStrike recognized a massive $1.39 billion in total revenue. That number sets our baseline. It tells us exactly what the company brought in during that specific period and really highlights the sheer massive scale they are operating at right now.
But they didn't stop at just revenue. They also hit an astounding $5.51 billion in ending annual recurring revenue, or ARR. This is a foundational metric because it represents a massive base of recurring subscriptions rather than just one-off software sales. And on top of that base, they pulled in a record $256 million in net new ARR. This is an absolutely vital piece of evidence for the market. It proves that customers aren't just sticking with CrowdStrike, they are actively increasing their financial commitments and expanding their footprint on the platform. Crucially, they also generated $468 million in free cash flow. You know, it's one thing to show growth on paper, but it is entirely another to show a strong ability to turn operations into actual, undeniable cash generation. This proves the underlying financial mechanics of this business are incredibly healthy.
Now, as you might have guessed, the absolute most critical number behind all of this is that annual recurring revenue, or ARR. CrowdStrike doesn't just sell software once and walk away. Their entire model is built on ongoing subscriptions, making ARR the ultimate measure of their compounding momentum. If that ARR growth were to slow down significantly, well, the market would immediately start questioning if the hypergrowth phase is over.
Let's move on to the AI security opportunity.
CrowdStrike is clearly treating the AI era as an entirely new security market. Just look at their recent August expansion of Project QuiltWorks. They are pushing this framework down to small and medium-sized businesses specifically to tackle what they call frontier AI risk. They aren't just tacking AI on as a neat little feature, they are completely restructuring their market approach around it.
And honestly, this perfectly captures the great contradiction of the AI era. On one hand, AI creates incredible new software to automate enterprise work and boost efficiency. But on the flip side, increasingly sophisticated AI actually empowers attackers. It helps them discover vulnerabilities, generate malicious code, and move much, much faster. It's a total double-edged sword, and it creates a massive new cybersecurity problem that companies absolutely have to solve.
So, let's break down the bull versus bear reality. Right now, there is a massive core tension tearing through the market. In one corner, you've got CrowdStrike's dominant, highly profitable recurring revenue engine. In the other, fierce enterprise competition from massive tech titans like Microsoft with their enormous distribution and Palo Alto Networks with their incredibly broad security platform. It's a literal heavyweight fight for enterprise security budgets.
Let's look at the bull case first. The bulls argue that CrowdStrike already has that massive $5.51 billion recurring revenue base to build upon. As the AI attack surface expands, meaning more AI applications, agents, and cloud workloads that need protecting, customers will naturally choose to consolidate more of their spending onto CrowdStrike's unified Falcon platform. If customers consolidate, they spend more, and switching away becomes way harder.
Conversely, though, we have the bear case. These folks point right at the sheer risk of those sky-high market expectations we talked about. The bears will tell you that cybersecurity is an intensely crowded, well-funded market. Plus, growth companies eventually face the incredibly difficult challenge of translating their rapid expansion into durable earnings and cash generation at scale. The bears are basically asking, how long can CrowdStrike really maintain this breakneck pace?
Let's go over 6 key metrics to watch.
If you're watching these earnings drop, please look past the headline earnings per share. Use this exact playbook. Revenue and ending ARR will show us the true size of their recognized sales and subscription base. But really hone in on net new ARR to see if their pace of additions is actually speeding up. Combine that with free cash flow and operating margin to prove they're generating real cash and leverage. And finally, look to their full-year guidance to see exactly what management thinks is coming next.
Those metrics are ultimately going to build into one of 3 narrative outcomes post-earnings. First, acceleration. If they deliver stronger than expected recurring growth and raise their outlook, demand is clearly accelerating. Second, stabilization. Growth remains healthy, but the market views them as experiencing a more normal, mature trajectory. Or third, deceleration. Disappointing ARR growth or lowered guidance makes investors question just how much gas is really left in the tank.
Which brings us to the real growth question.
Investors absolutely need proof that CrowdStrike can successfully monetize what they call the new agentic era. Think about it, this is a future where AI software agents, not just humans using keyboards, are autonomously accessing data, interacting with systems, and executing actions across a whole enterprise. Every single new connection an AI agent makes creates a brand new security challenge. CrowdStrike is positioning itself to secure this era, but as we all know, an AI opportunity isn't the exact same thing as actual AI revenue. So when the numbers finally hit the wire on August 26th, the true investment story begins when we look past the immediate day one stock reaction. Look at the data and ask yourself, what do these underlying metrics actually reveal about CrowdStrike's next 5 years? Are they merely competing in the AI era, or are they setting up to completely dominate it?